Think about this for a second. Today, when you apply for a credit card, buy a car, or try to get a mortgage, you know exactly what the bank is looking at. They pull a 3-digit number, your credit score. You can check it on your phone right now. You can see your payment history, your debts, your financial footprint. It is entirely math. But here is the thing. That 3-digit number didn't even exist until 1989. And the legal right for you to actually look at your own credit history? That didn't exist until 1970. So what happened before that? How did you get a loan in the 1950s or 60s? The answer is one of the darkest, most invasive secrets in American financial history. For most of the 20th century, you were not judged by a mathematical formula. You were judged by a secret file. A file filled with rumors about your drinking habits, your marriage, your political views, and your sex life. This file was compiled by men who snooped around your neighborhood, asking your neighbors for gossip. And if a jealous neighbor lied about you, your life could be financially ruined. You would be denied loans, fired from jobs, and rejected for insurance. And the most terrifying part? It was completely legal, and you were not allowed to see what was inside that file. This is the story of how an invisible surveillance empire controlled America, and the spectacular reckoning that finally brought it down. Let me take you back to an America that feels almost completely alien to us today. Imagine it is 1965. You are a hard-working citizen. You pay your bills. You want to buy a new house for your growing family in the suburbs. You walk into your local bank, sit down with a loan officer, and ask for a mortgage. Today, the computer would give an answer in seconds. But back then, the loan officer would smile, take your application, and tell you they would be in touch. The moment you walked out the door, the bank did not run an algorithm. They made a phone call. They called an information broker. At the time, the banking industry relied entirely on vast, shadowy networks of private investigators. The bank didn't just want to know if you had enough money in your savings account. They wanted to know what kind of person you were. They believed that your moral character was the true indicator of whether you would pay back a 30-year debt. Were you a stable, church-going family man? Or did you stay out late at the local bars? Were you a loyal employee, or were you known for arguing with your boss? Were your kids well-behaved, or were they running wild in the streets? To find the answers to these deeply personal questions, the information brokers deployed a small army of field inspectors. These inspectors would literally knock on the doors of your neighbors. They would go to the local grocery store. They would talk to your landlord. They would ask the mechanic down the street about you. They were collecting neighborhood gossip, compiling every whisper, every rumor, and every grudge into a physical paper file with your name on it. If you were a good, quiet citizen, maybe the file was clean. But what if the inspector knocked on the door of a neighbor who hated you? What if someone told a lie just to be cruel? In a world without scores, that lie became your absolute financial reality. And the company that perfected this terrifying system of surveillance was about to become the most powerful invisible force in the United States. The company that held all this power didn't start in a high-tech government lab. It started in 1899 in a small office in Atlanta, Georgia. It was founded by two brothers, Cater and Guy Wolford, and they called it the Retail Credit Company. Back then, local grocers and merchants had a simple problem. They needed to know which customers would actually pay their tabs. So, they would get together and share lists. They literally kept a physical book of who was a deadbeat and who was reliable. It was pure gossip. But the Wolford brothers saw something else. They saw a gold mine. They realized that if they could organize this neighborhood gossip, put it on paper, and sell it back to the merchants, they could build an empire. And that is exactly what they did. They started small, keeping index cards on local residents. But as the American economy exploded in the 1920s and 30s, so did their business. People were suddenly buying cars, washing machines, and radios on credit. Life insurance became a massive industry. Every single time an American applied for credit or insurance, a company needed to know if they were a safe bet. The Retail Credit Company stepped in to fill that void. They expanded from Atlanta to every major city in the United States. By the 1950s, the Retail Credit Company was no longer just a small list of deadbeats. It was a corporate behemoth. They had millions of files on millions of Americans, stored in massive filing cabinets. But to get all that information, they needed a workforce. They needed eyes and ears in every single neighborhood in the country. And the way they built that spy network is where this story gets truly disturbing. To feed this massive machine, the retail credit company built a private intelligence agency that rivaled the FBI. They hired thousands of young men. They called them inspectors. These inspectors were not financial analysts. They were not looking at your tax returns or your bank statements. Their entire job was to blend in. They wore ordinary suits. They drove ordinary cars. They would park down your street and just watch. Their training manuals gave very specific instructions. An inspector was supposed to talk to at least 2 of your neighbors, plus your employer. But they were told to never reveal the real reason they were asking questions. They would pretend to be old friends, or someone verifying an employment reference. They would ask your neighbor, does he drink too much? How often does he have parties? Does his wife seem happy? Are they living beyond their means? The inspectors were looking for anything that could be considered a moral hazard. In the mid-20th century, that meant almost anything outside of the strict, traditional American norm. If you were a bit too loud, a bit too political, or if your yard was messy, it went straight into the file. They were essentially paid to snoop. And they were incredibly fast. A typical inspector was expected to churn out 15 to 20 reports every single day. Think about the math on that. You cannot do a thorough, accurate investigation of a human being's entire life in just a few hours. So, the inspectors cut corners. They relied on snap judgments, personal prejudices, and the petty grievances of neighbors. They took whatever gossip they heard and wrote it down as absolute fact. But the inspectors were only half the problem. The company had another, even more deceptive way to spy on your family. While the men in suits were asking your neighbors about your drinking habits, the retail credit company had another trick up its sleeve. And this one was completely brilliant and completely terrifying. Sometimes, the spy wasn't a man in a trench coat. Sometimes, the spy was the nicest woman on your street. Have you ever heard of the Welcome Wagon? In the mid-20th century, when a new family moved into a neighborhood, a friendly local housewife would show up at their front door. She would bring a basket filled with free samples, local coupons, and maybe some fresh muffins. She would welcome you to the town, smile, and ask if she could come inside for a cup of coffee. Of course, you let her in. It was the polite thing to do. She would sit on your couch, compliment your home, and start making small talk. What a beautiful television set. Where does your husband work? Do you think you will be buying a second car soon? How many children do you have? It felt like a warm, neighborly chat. But it was a stealth interrogation. Many of these welcome hostesses were paid informants. They were essentially data brokers in aprons. As they drank your coffee, they were quietly taking inventory. They were judging the quality of your furniture, assessing your income level, and noting down every single personal detail you eagerly shared. The moment she left your house, she wrote it all down. That friendly chat was turned into a detailed financial and social profile. That profile was then sold to local merchants, insurance companies, and credit bureaus. You thought you were making a new friend. In reality, you were handing over your personal data to a corporate surveillance machine. But even with all this snooping, the inspectors had a massive problem. And it led to the most destructive practice in the history of American credit. You might be thinking, well, if you were a good person, you had nothing to worry about, right? Wrong. Because the retail credit company did not just want boring normal files. They wanted dirt. And to get that dirt, they created a system that virtually guaranteed innocent people would be destroyed. It was called the quota. The management at the retail credit company believed that a certain percentage of the population was inherently risky or immoral. They figured that at least 10 to 15% of all Americans had some kind of dark secret. So, they placed immense, relentless pressure on their inspectors to find those secrets. If an inspector handed in a stack of clean, positive reports, his boss wouldn't congratulate him. His boss would accuse him of being lazy. The company actually kept track of how much protective information, which was their secret code word for negative dirt, each inspector was finding. If your negative numbers dropped, your pay was cut, or you could lose your job entirely. Now, put yourself in the shoes of a tired, overworked inspector. You have to write 20 reports today. You ask around about a guy named John. Everyone says John is a great guy. Normal. Boring. But you need to hit your quota for negative information this week to keep your job. What do? You invent it. Or you wildly exaggerate it. If a neighbor mentions they saw John have a single beer on his porch, you write down known to drink heavily. If John had a minor disagreement with his boss 5 years ago, you write down insubordinate and financially unstable. You turn total fiction into official corporate fact. The inspector hits his quota. He keeps his job. But somewhere, a man named John is about to have his entire life derailed. And the absolute worst part? He will never even know why. Imagine waking up one morning and realizing you have been blacklisted by the world. You apply for a life insurance policy to protect your family, and you are flatly denied. You go to a local bank to get a loan for a car, and the manager shakes his head. You apply for a new job, a job you are perfectly qualified for, and suddenly, they stop returning your calls. You ask why. You beg for an explanation. But no one will tell you. The bank manager just looks away and says, "Our policies have changed." This was the blackball effect. And it was happening to thousands of Americans all across the country. Because of the quota system, secret files were bursting with fabricated dirt. An inspector might have interviewed an ex-spouse who held a grudge. Or maybe they talked to a neighbor who hated the color you painted your house. That neighbor tells the inspector you throw wild parties. The inspector, desperate to meet his quota, writes down that you are a reckless alcoholic. That single piece of paper was then locked inside a vault at the retail credit company. From that moment on, every time you tried to make a financial move, that file was pulled. You were instantly marked as a high-risk liability. People's lives were quietly, systematically destroyed. Men suddenly lost their established careers. Families were abruptly denied mortgages and forced to stay in cramped apartments. Small business owners were driven into bankruptcy because they could not secure a simple line of credit. They were fighting a ghost. They were boxing with shadows. They had no idea that a massive corporation had a dossier on them. And even if they somehow figured out that this secret file existed, they faced an even more terrifying reality. Let's say you finally figured it out. Someone at the bank felt bad for you and slipped you a hint. They whispered that the retail credit company had a file on you. You are furious. You know you are a good person. You know the rumors are completely false. So, you march right down to the local office of the retail credit company. You walk up to the front desk, slam your fist down, and demand to see your file. You demand to know who has been telling lies about your family. Do you know what the receptionist would say to you? No. And she was completely backed by the law. In the 1950s and 1960s, there were absolutely no consumer privacy laws protecting you from information brokers. The file was legally considered the private property of the retail credit company. You had zero legal right to see it, touch it, or even know what was written inside it. If a jealous neighbor falsely claimed you were a criminal, you could not dispute it. You could not take the company to court to correct the record. There was no appeals process. There was no customer service hotline to fix errors. You were entirely at their mercy. The retail credit company had essentially become a shadow judge and jury. They held the keys to the American dream. They decided who got to buy a house, who got to drive a new car, and who got left behind in the dirt. And they answered to absolutely no one. They were invisible, completely unaccountable, and practically unstoppable. They had built a perfect, seemingly unbreakable system of control. But then, the turbulent 1960s arrived, and the greedy company made one massive, arrogant mistake that would finally expose them to the world. By the late 1960s, the retail credit company was drowning in paper. They had tens of millions of physical files stuffed into thousands of massive steel cabinets across the country. But a new, terrifying technology was emerging that promised to change everything: the computer. The executives at the company saw computers as the ultimate tool for total dominance. They announced a grand, ambitious plan to digitize every single paper file they owned. They wanted to take all the neighborhood gossip, all the vicious rumors, and all the fabricated quota dirt and put it into a centralized digital database. They envisioned a future where any bank, any insurance agent, or any employer could pull up your secret dossier in seconds with the push of a button. But this arrogant move was a massive miscalculation. In the 1960s, the American public was already deeply paranoid about government surveillance and the loss of civil liberties. When news broke that a private corporation, a company nobody had ever elected, operating completely in the shadows, was building a computerized national data bank, the public panicked. Newspapers started publishing terrifying exposes. Journalists dug into how these secret files were actually made. For the first time, everyday Americans realized their financial lives were being controlled by a private intelligence network. The illusion of privacy was shattered completely. The outrage spread like wildfire. Citizens flooded their political representatives with angry letters. How could a private company legally hold a digital monopoly on the moral character of the American people? The pressure became impossible to ignore. The invisible empire had finally stepped into the light, and the United States government decided it was time to drag them by the collar in front of the cameras. In 1968, the United States Congress did something it had never done before. They subpoenaed the executives of the retail credit company to testify in Washington. The shadow brokers were finally forced to sit under the bright, unforgiving lights of a Senate committee room. It was a total media circus. Senator William Proxmire led the charge, relentlessly grilling the executives about their secretive practices. The hearings were broadcast to the nation, and what the American people heard horrified them. Brave whistleblowers came forward. Former inspectors sat before Congress and confessed everything. They testified under oath about the brutal quota system. They admitted that they were forced to invent negative gossip just to keep their jobs. They explained exactly how they would peek through windows, bribe landlords, and manipulate friendly housewives to gather your private data. The executives of the company sat there, sweating, trying to defend their empire. They claimed they were just providing a necessary service to protect the American economy from bad investments. But the senators were not buying it. The evidence of innocent lives ruined by false information was absolutely overwhelming. The hearings revealed a system that was fundamentally un-American. It was a system where you were considered guilty until proven innocent, except you were never even told you were on trial. The public outrage reached an absolute boiling point. The government realized they could not let a private corporation continue to wield this kind of unregulated power over the citizens. The age of the secret dossier had to end. Congress knew they had to write a law that would fundamentally rewire the financial system. They were about to pass a piece of legislation that would change how you buy a home forever. In 1970, the United States Congress dropped the hammer. They passed the Fair Credit Reporting Act. It was a massive, sweeping revolution in consumer rights. For the very first time in American history, you were granted a fundamental legal right. You could finally demand to see exactly what was written inside your secret file. And if an inspector had lied about you to meet a quota, you now had the power to dispute it, and the company was legally forced to delete the false information. The terrifying era of the neighborhood spy was officially dead. The financial industry had to shift from subjective gossip to hard, objective math. They had to rely on actual payment history, which eventually paved the way for the three-digit credit scores we all use today. But what happened to the retail credit company? They were universally despised. Their brand was completely toxic. So, they did what any shadowy corporation does when the public turns against them. They hid behind a brand new identity. In 1975, the retail credit company quietly changed its name. They chose a word that sounded modern, technological, and completely harmless. They changed their name to Equifax. Yes, that Equifax. The 1970 law fixed the gossip problem. It gave us the credit scores we rely on today. But let's step back and look at the world we actually live in right now. Are we really any more private today than we were then? Equifax and other major bureaus no longer send men in suits to knock on your neighbor's door. They don't have to. Today, you carry the spy right in your pocket. Your smartphone, your browsing history, and your social media algorithms are constantly harvesting your personal data. The invisible dossier didn't disappear. It just evolved. It became digital, silent, and infinitely more powerful. The system didn't change its goal. It just changed its face. If this story changed how you view the financial systems controlling your life, hit the subscribe button. We go deep into the hidden machinery of money and power. I will see you next time.